when we make a decision as a firm, now everybody has buy-in and they understand the why.
In today's episode, Courtney and I sit down with Andrew Mahoney, the president of CCIG Insurance. We talk about how to navigate the current hard market you are facing. We talk about the importance of relationships with your team, with your customers, with your underwriters, and how to establish those relationships. Talking about how to attract and keep players within your organization and how to even get them even more bought into the future of your organization. This episode is action-packed. With that being said, let's start the show. Hey, welcome to the Insurance Buzz. We are your hosts, Michael and Courtney Weaver, and we have a special guest with us today, Andrew Mahoney. Andrew, how are you doing, man?
I'm doing wonderful. Thank you, Michael and Courtney, for having me.
Absolutely. We are pumped about today.
Likewise.
Before we even started, we were hearing a little bit of your story, your journey in insurance. We were kind of going back and forth because you're a Colorado resident, and we were talking about mountains and snow.
How
and
we try to, we just survive getting down a mountain. You used to race going down mountains. So
moguls and
we're
jumps.
Similar here. All right.
Yeah. We are not the same. Not the same at all.
Yeah, but you're wakeboarders, though. To me, that's crazy.
Well, we're not doing like barrel rolls or.
I just picked it up like 3 years ago. So
we're just cruising on the water.
At 35, when you're young and there's no fear, like you don't even think about getting hurt. You're just like, I'm going to go do this shit. At 35, I'm like, if I try this and get hurt, what's the repercussions? How long is it going to take me to get over this concussion?
What if I fall?
What if I fall?
How long am I going to be down and out? Yeah. That's the thought that comes through our mind.
Yeah, the soreness is real.
Just don't recover like you used to.
You
sound like an old person right now.
You do. Let's not go with that. Andrew, we want to hear your story. We were chatting a little bit before how you got into insurance and where you're at today.
Yeah, I would say I tried everything in my power to not be in insurance. My dad started the firm in 1985, and when your parents build an organization and you're just trying to be a kid and not really did I really understand what Brooke and my mom Kelly were doing. At times, probably not. I was more into sports and trying to be with friends. And so I just kind of always thought that Dad had a desk job and that wasn't really fun. And I'd rather be out in the mountains or skiing or whatever. But after college, that was in 08 and 09 when the world was not so great. And I was very fortunate to find a job with a wholesaler out of Chicago. So I moved to Chicago, spent 4.5 years with that wholesaler and worked with some incredible people, very bright folks that built a wonderful organization. And then that kind of launched and springboarded my career back to Denver to where I could work with my family.
So I got to ask, what did you learn at your job in Chicago with the wholesaler? What did you learn there that you took with you and incorporated into your brokerage in Colorado?
I think one, the work ethic. And when I say that is, when you're in the wholesale space, everything is, I needed it yesterday, and it's because some traditional market dropped the ball, an underwriter said they could do it, and it didn't get approved. And so now a broker is scrambling trying to get a deal done. So by the time you get a deal, it's like the renewal is, within a couple of days, and you're just sprinting. So your ability, you have to think so quickly about the marketplace. You have to know the marketplace, and you have to build strong relationships with underwriters, because you're kind of, I wouldn't say calling a favor in, but you're not blasting the market. You're really showing like your weight as knowledge within the marketplace. And if you can get an underwriter to do something, that gives you a shot at writing all of the business within that agency. So work ethic was huge. We had no territory, so we were up early, answering calls from New York, and we were staying super late answering calls from the California side.
Yep. Man, It's funny you bring up the relationships with the underwriters. That was one of my favorite. I'm going to date myself again a little bit, but when I got into insurance, it was super important to build relationships with your underwriters because they basically had like the say, like, yeah, we can do the business or no, we can't. It's not, at least in the personal lines world, it's not as much like that anymore. I don't know about.
Is it still like that in commercial?
Like the commercial space?
Oh yeah, very much so. I'm sure we'll get into the hard market, but
okay.
Absolutely. That's actually it's probably my number one thing about being in the insurance industry is the relationships you build with your clients, but also the relationships that you have to have on the underwriting side. You're only as good as the underwriters you have on your team.
Dang, man. I'm like mind blown right now because like the State Farms of the world, they were always like, well, we can't rely on underwriters anymore because everything's so data driven from a computer standpoint to where now the computers basically have the say. So we went from having one underwriter that we could talk to now not even really having relationships at all with underwriters. So that's amazing. I love that that's so important to you because I loved, like, when I was a producer working with an agent, there was one go-to underwriter that we had that I had a great relationship with, like knew her kids, where she was from. We would always catch up. And so I love that you're hitting on that because that's huge.
So is that across the board in commercial insurance?
Oh,
as far as relationships with underwriters?
Yeah, that you still have that personal connection with underwriters?
Yeah, no, we represent 250 plus carriers and products. Uh-huh. And even within those firms, there might be 5 or 6 different underwriters that only underwrite a specific coverage. So you can't, I wouldn't say we have we pride ourselves on having fabulous relationships, but you can't have like level 5 relationships with every single underwriter that you work with every time. I mean, I would strive for that, and but reality is reality. But I do think that our firm and all the advisors and our marketing team, like, yeah, they take that into serious heart, because if you're bringing an account to them that either has risk or hair or is completely vanilla, but you just want the best product, or you're asking for a specific coverage that you're going to need some underwriting advice on. Like, if you have that relationship, you're already at the top of the stack. And when we talk about a hard market, the underwriters are just getting pummeled with submissions today. And so if you have that relationship and they're excited to work on your deal and you have all the right information for them and you're explaining like how this partnership can create a win for both of us, I think underwriters get excited about that, and they're going to drop whatever they're doing so that they work on a deal. And so brokers are in a unique spot where we've got to manage 2 relationships. You have to manage the client relationship, and there's a whole aspect of that. But then there's really important part of it is we have to manage the underwriting relationship too.
So, all right, before we get into the relationship piece, because I do want to touch base on that, but you just talked about the hard market and right now what we're talking about, right now what you're going through. I'd love to know what changes you've had to make in the hard market that you are currently facing and that we're in, and what you see doing going forward that's going to work.
Yeah. This is the second hard market that I've been through. Most of our firm, it's probably their first hard market. And then, some have been through cycles of the hard market, but I think this hard market's unique because it's almost every line of business except for workers' compensation is hardening, and it's hardened really fast. And we're in the time period of the rate correction that the carriers are making is pretty significant. And when there's volatilitiness within the market, insurance buyers have a lot of questions. I think sometimes there's opportunity for brokers because either agents are asleep at the switch, and you can come in and start to communicate, your value and the insights and, your kind of prediction of where things may outcome. And so for brokers, like, there's the opportunity for us. But really the hard market over this period of time, it's been really challenging. So from a retention standpoint, we've had to really rethink about how to be proactive. So we aren't that broker that's asleep at the switch. So we rebuilt everything from our renewal process, and we started 180 days out. And that connection with the policyholder 180 days out gives them insight into where we think the market will be. There's no way we can predict what the rates will be yet. But we're trying to prepare them. Yeah.
Yeah, not to cut you off, but let's get into that just because I think doubling down on retention right now is critical. So at that 180-day mark, what does that even look like? Are you just writing a thank you card? Are you reaching out to them as a phone call to invite in for an appointment? What does that look like?
It's way deeper than that. So our teams will sit down together. We'll have our risk management team, which is loss control claims, our actuarial teams, the producer, our marketing team, and our service team all come together. And we talk about the account, and we talk about it from a relationship standpoint. So where do we, on that scale with the client, have a relationship? How is the market relationship? Are we going to get non-renewed? Was there a big loss this year? We dissect the whole account, and that kind of paints a strategy for us to say, okay, well, this is a high general liability line. We know that the market is unhappy because of losses, and it's not in the best appetite, or vice versa. And then we kind of come up with that game plan and go meet with the client. And we walk them through, this is everything that we're going to do. This is what we've done year to date. And then we start to meet on a 30-day basis with that client all the way up until renewal. And if game plans change or losses incur over the next kind of 60, 90 days, we can communicate that shift in game plan, the reasons why, to the client, and then execute on what we're telling them we're going to do.
So you sit down with essentially like a framework. Now, let's say, do you meet with them regardless of if you think they're going to shop you or not?
100%.
Okay. So the framework is really just to come up with like, okay, what is the best plan moving forward? You're triaging, like what's the biggest wound? Is that what you're looking at there?
Yeah. We don't have to like pick on the stragglers, that have like hair to them. It could be a perfectly clean account with a great partner. They have no losses. And part of our strategy might be just telling them that you're with the right carrier. Our strategy's working.
So good.
And so we don't have to go to market. And this carrier wants to keep you as a client. We're going to negotiate a much lower trend than the average that we're seeing. And we're going to keep you out of the marketplace because we don't need to burn underwriters. That goes back to the relationship side. They don't need practice quoting. We don't need practice quoting. And if we can have everything wrapped up 45 days, 30 days in advance, then why would we not go forward with that type of strategy?
So I love that you're being proactive instead of reactive, but I want you to clarify something. So when you say you're having appointments, is it in person? Is it virtual? Is it over the phone? Because there's a lot of opinions out there about appointments. So I'd love to know what you're doing.
Yeah, it's probably a mix. It's probably what the client prefers. We have offices in Colorado and Texas, but we've got clients all around the country. So sometimes that pre-renewal meeting may be in person. Sometimes it's on a Zoom call like this. But it really kind of varies by client. Yeah. Okay. It also depends on that relationship that we have with the client. If it's our first year going into it, we'll probably bring that entire team out in person if we can. Because we want to start to build relationships, not just with the advisor that won the account, but there might be 10 hands touching that account. And we have to have 10 people building strong relationships all within that account to protect it from a retention strategy.
Okay, so you said you have to have 10 people building relationships to retain? There
may be 10. The think of it this way. You'll have the risk management team working with a client with their safety professionals. Our actuaries might be working with the CFO. Our producer might have the relationship with the CEO that's making the buying decision. We could have our account manager that's working on the operations on a day-to-day. Each one of those individuals has a different relationship within that client. And so part of that renewal strategy is bringing people back together to say, this is our team, we're here to support you. And you got to have a face-to-face or an in-person relationship if it makes sense.
I know. You can see me getting fired up.
You know how fired I get up on in-person appointments. Okay, but I want to talk about, because these are obviously some high value customers. Okay, like
you know your market.
Yeah, like you've got some serious premium, I would assume. So if someone is listening to this right now, and let's say they're in the personal lines business, all right, so your auto, fire, home, average customers maybe $2,000, $3,000, $4,000 a year that they get paid 10, 15, 20% on with some carriers. Okay.
Yeah.
What besides in-person appointments, because they're going to hear that from me all the time, okay? Like, you got to be meeting with your customers either in person or virtually. What are some other things that automatically come to your thought process when I'm asking this question 6 months out, 180 days out, that they could implement within their business to help save customers and take more of a proactive approach versus a reactive?
Yeah, leveraging some of the technology out there within the agency management systems, I think, is one. And these are, you don't have to do this on all of your personal lines accounts, but we have a high net worth division, and then we have a personal lines division, and there's no manpower to meet with the 8,000 policyholders or how many we ever have. But we can send letters out to those clients, and it'll explain how hard the personal lines market is going right now. I mean, things that we're seeing in California, the events that just happened there, an earthquake and a hurricane, and then we've got Hawaii on top of this. We are by no means coming out of a hard market anytime soon. I'll argue we are halfway up the mountain, and I continue to hear that from carriers. And so how do we communicate that as a consultant, not just a transactional broker, to all of our policyholders? You've got to be able to communicate that.
Oh, I like that. Instead of a transactional broker, how can you be a consultant? Man, that's like a mic drop situation right there. Shit, man. Andrew's bringing the heat today, baby. Let's go.
I knew you were going to get fired up, because even when you were talking about the conversation that you're having, the proactive approach, you truly sound like a liaison between the customer and the carrier, like communicating information on both sides. But I have to dive into the high value customer, because one of the biggest things that we are hearing in the personal line space is, how do I attract my ideal customer? So was this something that you talked about prior to going into the space that you're in right now? Tell me how this comes about to where you have a team of 10 people that are servicing these big customers. How do you attract it? How do you speak to them? What's the different level of service that you have to provide? I need to know all the things on this.
Oh, I mean, we could spend all day on this. So I'll bifurcate it between.
How much time you got, Andrew?
All afternoon, guys. I know that you guys like. Well, Michael, it sounds like you're a bourbon guy. So if this podcast goes into the night, then I'll probably have to break out some bourbon and we can really get into it.
Oh shit, man! Some bourbon cigars. Let's do it.
Oh my god. I'm gonna have to tap out. Come on, all
right. I'm sorry.
No, it's not. I'll bifurcate it into two ways, because I do think it's different. On the high net worth side, as we look to scale that part of our business, that we look at those buyers as a completely underserved market. And what I mean by that is, no offense to the direct writers, but their level of sophistication and the risk requirements or exposures that those families have, there's just an underserved product that really can kind of touch on everything that they need. So we looked at what were the carriers that we need in order to enter into that space. What are the claims people that we're going to need to assist those policyholders as they go through certain claims? And then we just made big investments, and we hired them, and we brought them on board, and we just said, this is an investment that we think is going to take a X amount of percentage time to come to fruition or get an ROI on. And it was, I'll tell you, it's a lot faster than what I pro forma'd, but that's kind of how we looked at the high net worth space. And then from a service perspective, we had mentioned this earlier, but this is a people-driven business. And so when we looked at the account executives and the AMs that we would put in that space, these are high net worth individuals. They're used to A players across the board. And so when we went in and we built job descriptions that I think are way above and beyond kind of what a normal account manager would have. Like our requirements and standards are pretty up there. And then on the commercial side of the business, this is something our firm's been striving for the last decade is just how do we continue to swim upstream and write larger accounts and compete with the global brokers and the national brokers. And so we kind of, not only do we do an NPS score with our clients, but we interview clients. We ask them why they hired us, what attracted you to us. Is it the people? Is it the product? Is it the risk management teams? And then where do we get better? It's not always, the positive side, but where are we lacking? And do we lack in contract review, or do we lack with, some type of OSHA training? And then we analyze that as a leadership team and try to understand where we make those investments and what's best for the firm.
Oh my God. I've been debating on buying a tambourine, and I feel like this is the moment where I would shake my tambourine. Because it's so good. You're hitting on so many points where, especially I hear this a lot. Where do I find great people? Well, first of all, you have to be willing to be very specific about the role that they're providing to the customer. Mm-hmm. And you have to be willing to invest in great people. And then the backside of this is you're asking for feedback, not only within your team, but from your customers, from your carriers, from everyone that you interact with. In the people business, you're constantly asking for feedback from people. Like, so where's my tambourine? I need it.
We do need a tambourine. Gosh. I'd be interested for your 8 players. Are you paying at top of market or above market for your players on your team?
Well, what's unique about our model, because I love and hate that question. It's not always about what's the benchmark and then let's just pay above it. And money is always the driver that keeps 8 players around. Sometimes money is a total aftermath to delivering a great product. And so we built more of a scorecard mentality, or not mentality, but it's a platform where it's all about metrics. And if you execute at this level and it's based on retention and then based on growth, which are what the leadership team is looking at. So we try to align all of those things upward, downward, and across the agency so that the top performers, if they want to make more money, they know exactly how to get there. That yellow brick path is already painted for them. And then we have people leaders that are constantly reporting that this is where you're on track, this is what you're doing, here's how you can excel better, how do we train you to become a better consultant, et cetera. And they're meeting with them on a one-on-one basis, weekly, trying to improve or accomplish the goals that those individuals want.
Did you call them people leaders?
Yeah.
Yeah. Even the rhetoric that you're using is completely different than like a sales manager, or it's a completely different space. So let's get into your culture, because I want to talk about how do these people, are they self-managed? Are they independent? Like, what does that structure look like when you hire top performers? You ask for feedback. Let's break this down.
Yeah, happy to get into it. So we live and die by an acronym called RISE, RISE. And R stands for relationship, I is for innovation, S is for strategy, and E is for excellence. And then we have a component called Campfire. And Campfire came about, it's our lens on how we look at our organization internally. So every decision we run through has to go through that acronym. If we make a decision within the firm, how are we strengthening that relationship with that person, that employee, that underwriter, that client? How are we being innovative? How are we challenging people to be innovative? We brand ourselves as being the curious broker, so we better be asking questions. And what does that mean at every level? That's part of the survey and the feedback that I was mentioning. And then strategy. How are we empowering our people to be strategic and not just answering emails and kind of getting through the mundane part of the day, but are they allowing themselves time to sit down, take a moment, and think on the account versus within the account? And if we do all of those things right, we feel like we're going to be excellent at what we do, which will either win new business or retain new business, or have a wonderful culture where people want to stay for a long time and build a wonderful career.
All right. So obviously this sounds awesome in theory. Okay. But when shit hits the fan, how do you make sure? I mean, when they're getting claims calls, when they're getting complained at, when whatever, how do you make sure you withhold this culture? Because if I'm thinking to myself, if I put myself in a new agent's perspective, I'm like 3 months in, I'm trying to do the things you're talking about, but I feel like I'm getting hit in the face every single day. Like, how do you continue? How do you not only implement this culture, but continue to build upon this culture?
Yeah, it's constant. It's never like set it, okay, we achieved it and now it's just going to run on its own. It's across the organization. That's also the people that you bring on, the A players, they have to embody a collaborative spirit. They've got to have this want to help. And so that exact, like when I was producing, just starting off, you're making tons of cold calls, trying to get meetings and appointments set, and you're just getting dragged through the ringer. I had a whole team around me that was constantly telling me, hey, this call could have gone this way. I sat in on this one. I loved how you did this. Try it this way next time. And you have to have that support. And on the service side, it's the same way. People leaders, but also your peers, like other account managers can step in and say, hey, you know what? You answered that this way. Let's try to do that this way. Or if you've got a client that's just furious, they can go through that experience. And then that's why we called it the campfire. And we're a bunch of, Rocky Mountain, love the mountain type people. But when you're around the campfire, you're only around the people you love. And I've never sat at a campfire where I'm like, I don't like any of you, but I'm going to endure this. Like, that's never been the case. So we were like, all right, let's create a campfire. So we built this huge bar in our office, and the happy hours, that's our campfire. And we can tell all of our peers and our friends the experiences you go through. And, oh my gosh, you won't believe this happened to me today. And you'll get all the feedback, and people are putting their arm around you, or they're telling you, yeah, that probably wasn't the best decision. Let's try this next time and see how that works.
So the campfire is amazing in person. How are you creating that virtually?
That was a challenge. It was hard. We started out. We've always kind of had a work from home voluntary policy. So this whole transitional curve through COVID didn't impact us as nearly as much as some people that just had to pick up and go home. But what I would say is it fell on the leadership team. Like, leading people through virtual is really hard. And we talk about, there's a reason why R is the first part of our acronym that we live by. And it's about a relationship. And it's so hard to have a relationship via Zoom. I don't know what your family's doing. How are your kids? Like, all of that kind of gets cut out in a Zoom meeting. So we got together as a team and we created a FOMO committee. And when we were allowed to come back into the office, people are attending and do I want to come back? Do I not? And so we just started throwing parties and it's not always around parties, but you had to be part of it. You had to be in the office to engage in this fun stuff. And we created FOMO, and everything we did was, how do we create FOMO? And it's been awesome. Our teams are in a lot more than probably other agency owners that I talk to. And that, I think, has endured that culture even through these ups and downs that every business owner is going through.
So, and I freaking dig the FOMO. Like, that's really, really cool. So, but let's say you have someone, and maybe you do have someone that doesn't work near you or out of state. What have you done to ensure that you continue to build that relationship with them in a virtual setting? Because I have also
both struggled with this, yeah.
Because at Weaver Sales, like, we're totally remote, and so this has been something we've struggled with. So I just learned. I'd love to know what you've implemented to try and establish those relationships.
Yeah, I think one-on-one meetings is critical, and a very consistent one. And I think that's a leadership 101 across the board. Is just, if you're constantly engaging with your team, it starts with great people leaders. If you've got great people leaders, they'll follow this. But if they're able to meet with their team one-on-one, and they show empathy, and they ask questions, and they really try to understand the challenges that individual is going through, and they're solution oriented, I think a lot can be accomplished, and I think the trust between that leader and that individual is strengthened, or that bond that is created is there. And then it's really the leadership's team here to get rid of all the hurdles for the organization. We want to be great insurance consultants that deliver products to policyholders, and all of these things that happen along the way, that's the leadership's team. You deal with that. You got to knock those out of the way so your team can continue to execute. And so if the leadership team isn't doing that, then that's going to create the distrust. And you can be in the office or you can be virtual. That has to happen. But as far as like building the relationships via Zoom with our team members that are outside the state, I think it starts on the one-on-one. And then we invest in the people. We bring them to all of our campfire events. We hold a carnival for all of our families and kids in July, and we fly all the team members in, their kids, their spouses, if they want to come. It can't be one or the other. I think it's a blend. You can't be all virtual or all in. I think it's both.
Yep.
Yeah, this is so good. One of the things that you said, I don't know if you said this since we hit record, but it was that we are selling promise on a piece of paper. And I think that this whole podcast, I have thoroughly enjoyed it because it really is, it's people focused, it's relationship focused, it's how to drive big premium, but also impact lives.
Yeah. And I'd like to get into one additional thing that you actually said before we actually went live. And then that was that you as the leadership team wanted to have like 70% of a watermelon versus 100% of a grape. And I think that has something to do just in hearing your team buying in, because they have a piece of it from what it sounds like. So I would love to talk about your mindset and thought process on why you all went in the direction that you went and what that has done to your culture and organization.
Yeah. Thank you for bringing it back up. It's really, really important to us. My dad started the firm in 1985 with my mom, and they built a wonderful platform for Spencer and I to take it to another level. Most of that was gifted to us. And so we've kind of feel more like stewards of Brooke and Kelly's business than anything. But part of that in scaling a firm from where we are today to 100 million and beyond, we had to get everybody aligned in our interests, and we had to stay independent. And independence is a big key. So what we did was, instead of Spencer and I owning 100% of a grape, and not aligning that interest, and then not allowing people to take part and create some wealth beyond just their production, commission checks that they take home, we broke the equity out, and we said, well, instead of 100% of a grape, let's own 70% of a watermelon, and let's give 30% of that to the teams that are really driving, and they're the ones that are grinding and getting punched in the face every day. And we didn't start this firm, but so we have an opportunity to gift some of that equity to them as well. And they're going to be along on this journey forever with us. And so let's let them, partake in some of the upside. And so we've recreated our whole equity program to align those interests. But I think it's key, and I think where you're getting at, Michael, is when we make a decision as a firm, now everybody has buy-in and they understand the why. And so it's not just leadership driving an idea because it's leadership and they don't know what's going on half the time. Now every partner in the firm understands the circumstance, why we made that decision. We did do our homework, and this was the best decision we needed to make for the firm. And so then all the partners agree, or at least that's the idea. There's definitely some arguments here and there, but overall it's alignment.
Hey, that's part of being a family, man. You can't always get along. But I love what you all did, because when I think of myself, if I'm just a producer, okay, like I'm going to show up, I'm going to do what I'm supposed to do. But when you actually have a piece of something, an equity stake that, hey, if it, as the company grows, so does my wealth, so does my opportunity. you create that automatic buy-in. And for the right person, I love that as a long-term strategy. It's amazing what you all did. And I know that change was probably scary, quite frankly, because it was venturing into some unknown waters. But it sounds like it's really, really worked out for you all. And so I appreciate you sharing that, because I think a lot of, even myself, I'm always trying to think, how can I get my team and the right players bought into the future? And so I appreciate you sharing that.
Yeah. It's new. So I wouldn't say that like we have all of the answers and, it's perfect, but I have seen a shift in how producers show up. It's not just their own little company within the umbrella of CCIG anymore. It's the name on the front of the jersey matters so much more than the name on the back.
Wear this jersey,
bleed this blood,
baby. Let's go. All right, Andrew, if somebody wanted to get in touch with you, connect with you, follow you, they had questions for you, maybe they want to become part of your group, what's the best way for them to get a hold of you and do that?
Yeah, you can head to our website at thinkccig.com, or you can email me directly at andrew.mahoney@thinkccig.com.
Okay. Andrew, this has been awesome, brother.
So much fun.
Yeah, it's been a real pleasure. And if you guys are ever in Denver and you want to snowboard or just hang out and come on over, swing by the office.
Fall down the mountain. I like it. I'm here for that. Andrew, we are from the Midwest. We are the kind of people that when you invite us, we take you up on that offer. So I want to make sure that you're okay. All right. Just make sure you're serious on that. Okay.
Oh man, I'll get some tips. It'll be good. So no, Andrew, thank you so much. And for all of those of you listening, thank you so much for your time. If you have any questions, I would love to know your biggest takeaway from today's episode. So make sure you text us 816-727-7610. If you haven't already, give us a 5-star review. Other than that, as always, time is the most valuable and important asset that we all have. We appreciate you spending time with us today. Go out, make it great. Andrew, thanks again, brother.